Have you ever created a pre-market plan and when the market opened and price got to your area of interest, you either did the opposite or you didn't take the trade? Well, I did that today, and I'm going to talk about why it's very detrimental to our career if we continue doing that, and why it's very important that we take the trades that we plan for regardless of the outcome. All right, so looking at the volume profile here and the balances, we could see that there's some aggressive rejection above the 68.30, 68.20 area. Essentially, bulls wanted to hold above it to maintain the trend to the upside, but on the ETH, we could see that they actually rejected 68.20 and accepted under the 67.90 balance. So the idea now is essentially there is a lot of aggressive sell pressure to the downside, especially after rejecting 68.20. But in my eyes, what I was thinking was, does that selling pressure continue under 67.60, and do we get that cleanup of volume from, I believe, Monday that was left behind? If we don't get that and there's a potential head fake under 67.60 and we see on the flow that there's some sellers that are getting trapped and some buy pressure starts appearing, we could look for that fade long targeting around 67.80 from the ETH POC. So that was the plan going in. I didn't really have a downside plan, even though we had a strong rejection from 68.30, because usually this low volume areas, they usually act as support, and we could see some buy pressure appear from there. So that's what I was looking for under 67.60. Look for that head fake. If we do continue lower, then just look for the short side on a retest to 67.60. All right, so looking at the price action here, we could see that right off in the morning session, we have a strong push up above 6808 balance, and then we actually reject and shoot below 67.90, basically showing that, you know, that there's still sell pressure and there's sellers that are stepping into this market. We get this pullback above 67.90, and then we continue rejecting below it. Now, this is where I started getting interested in potentially looking for those longs based on my pre-market plan, right? So my plan again was to look for that head fake under 67.60. If there's a lot of selling that's getting trapped and we see some buyers that are appearing on the flow, then I can look for that long targeting around 67.80. So this was my first trade. You could see here at 11:31. There was a lot of aggressive sellers that stepped in below there, and I was trying to catch the move before it actually happened. That entry might have been a little bit early, but in my eyes, it was actually a pretty good trade and a small risk. And it was a small risk based on what my reward was. Then, as we continued pushing lower, I was basically keeping an eye on it. There was nothing at this point at 11:48. We do see some absorption here, but there isn't any substantial buying that's currently stepping in. Once that new low gets created, we make another lower high, and then we start not really making new lows, but we start almost consolidating, right? So in my eyes, what this meant was that a buyer was accumulating price. We could even see that the delta bars are being highlighted in this navy blue color, and we can see some aggressive sellers that are stepping in with these bubbles, right? 54, 75, and 90. So the idea behind that is, if we can't break a low and there's a lot of sellers piling up at that low and price is not reacting to it, then we know that there's somebody behind there buying it up, right? And in this case, that's exactly what happened, and it could be seen by this accumulation of price movement, which is just barcoding sideways. And the other indication was obviously the blue bars being highlighted. Now at this point, because I did take a loss on my first trade, I was being a little bit more cautious. But like I said in the beginning of this video, my plan was to look for that head fake under 67.60, and if there's substantial buying and sellers get trapped, then look for that long. And guess what I didn't do? I didn't take that trade when there was a good opportunity right around 12:20, entry around 67.55 with the stop loss of 67.50, only risking 5 points. And basically what happened was price shot up right to my PT 67.80, and in between then I basically got FOMO, right? So you could see my other trades that I started taking, which weren't really planned. So you could see that I took 2 trades right here. This wasn't planned at all at 12:45, right? Thinking that, oh, I'm going to miss the move. It's going to keep going up. Not realizing that my target is only a couple points away, right? So the risk to reward is completely skewed. And you can see again here, I re-entered after exiting for a 4th and 5th trade around the same area, thinking that we're going to go higher when the reward was only up to 6781, right? And you could see where that's exactly where price rejected. Luckily, I was able to find a short trade around 6773. This whole area was the key resistance point at 6781. Where I actually took those longs, I should have started looking to the downside because there were buyers that were getting absorbed on the flow. But that short trade did basically made me in profit about like $80. But this just goes to show that it's very important to follow your pre-market plan. I did hesitate on the re-entry because of my first trade that I stopped out on. But if the confirmations are there, just take the trade, right? It's simple as that. It will avoid you taking any other unnecessary trades that you don't need to. I would have been done right around 12 o'clock, right? It hit my target around like 30 minutes later, and I would have been done on the day, right? But instead, I started taking these unplanned trades and making the day a little bit more harder than it should have been, right? So I hope this really helps somebody that's over trading or emotional trading. When you have a plan set, especially in the morning, just follow it, right? Because I feel like in the morning, that's when I have the most clarity, right? I wake up, I look at the charts, and I chart based on my auction market theory and volume profile strategy, and then just look at areas where I could execute on. That's all you have to do, right? That's it. And it sometimes it's very easy to say, but it's very hard to do. And it's just a part of the journey and the process that you have to learn to trust yourself and trust in your analysis and have confidence in it. And I feel like that just grows over time. I am getting better at it slowly, but it is a long process. So if there's anybody that's struggling with this, just follow your plan day to day, get the data that you need for your strategy, and see if it's profitable, right? That's kind of like all we have to do. And there's really nothing more than that. Don't make your life harder taking unnecessary trades like I did today, right? Like I did on this day. So just follow your plan, take the trades that you need to, and that's it, right? It's always quality over quantity. All right, you can see here on the footprint here, you can see at 67.60, we have an aggressive seller that got stuck down here. This is where I actually took my first trade. I did take it a little bit early due to the fact that it was a fade trade, so I wanted to get in as soon as possible. Eventually, price reversed back and stopped me out. Now, this area, you can see here, there's a buyer that appears at 67.60, and then some more sellers, aggressive sellers at 67.55. The key thing here is that if we have all these aggressive sellers that are appearing here at these lows, right? Why isn't the price going even lower? We could see we start accumulating here, right? We start moving sideways. This basically gave me an idea that, okay, we might start reversing back to the upside. Because like I said before, if there's a lot of sellers at these lows and they aren't able to break below, on the other side, there's somebody buying it. So you can see here also on these delta cumulative bars, you can see how high it goes, right? You can see some buying that's stepping in. This is essentially at 6755 where I could have taken my long. Stop loss is 6750 and then targeted up at 6781. So that was a perfect confirmation for me to get long again, even though I took a loss earlier. And taking the loss earlier basically messed up my psychology just very quickly. I became a little bit too patient, and I was looking for more pullbacks higher up, which was obviously the wrong thing to do. Because this was a fade setup, I needed to make sure that I was in at the lows because the trend was still to the downside. But that just goes to show that, taking a loss and then trying to re-enter even though you have a planned area is still, it could be a little bit difficult. Maybe if I didn't take my first trade, I would have been more inclined to take the second long, exactly what I did or what I needed to. And maybe that's just a lesson of being more patient, right? I have been more patient with my trades recently, and it's been working out. But on this day specifically, I needed to be a little bit more patient and just wait for the market to give me the right confirmations and not be in a rush to enter the trade. So now this was the confirmation for the short. Obviously, I should have avoided taking those other longs that I did after the move up. You could see how there's some aggressive buying that's stepping up here at these highs. But what does price do, right? We start reversing against it. The first one here at 12:34, bang, we go lower, and then again at 1 o'clock we go lower, and then right here at 6783 you could see a very aggressive seller that steps in with a negative delta of 968, which is a lot. So once I saw that aggressive seller step in, I knew that was a good resistance point at 6781 to look for that short side, which I took and basically recouped all my losses back and made a net profit about 80 bucks. But essentially, I made the day much harder than it should have been. If I just took that trade earlier, I would have been done for the day and I would have been up around like $500 on the day. So let's take a look at TradeZella and just show you guys my execution. I did make a mistake. It wasn't 80 bucks. It was actually $35, which is even worse. But you can see my executions right here. 5 trades that I tried to take along right after my initial setup took place. Basically, they were all emotional FOMO trades. And then the last short, once I got my thought process back, I was able to net $475. So I hope this helps any other trader that's out there that sort of deals with the same thing and isn't able to find the exact confidence that they need in their trade plan. Normally in the morning is when I have the most clarity. So when I do look at my charts and then I review them after, my plan tends to work out. It's just a matter of sticking to it and being disciplined to what you wrote down. And this video is basically a testament of that, right? If I took the trade that I planned for in the morning, I would have been done, right? The day would have been much easier and I would have saved a lot more time and mental headache, right? But because I didn't do that, I started taking unnecessary trades. My psychology got messed up and it just made the day much harder than it needed to be. So I hope this video helps you guys to really believe in yourself, believe in the plan and what you wrote, and just follow through with it. So if you guys like this video, make sure to comment, like, and subscribe, and hopefully I'll see you in the next one. Peace.